with Jaynat Krishna, the Senior Advisor at CSIS, and Anab, Global Macro Strategist of EMEA at Invesco. Welcome, gentlemen, to the show. Let's start by looking at the implications on the global markets. Anab, I would like to understand from you what is likely to happen in terms of the discussions in the Trump-Xi meet, and what could global markets really be watching out for?
Well, first, thanks for having me. Listen, I think let's start with what they're likely to accomplish. I think as your previous guest was saying, what's on the table is primarily, in addition to other things, rare earth mineral export controls that are expansive and worldwide that China has imposed. And U.S. export controls on semiconductors, also soybeans, and other issues that are not quite trade tension issues as such, almost social issues such as fentanyl export. I think what we should expect from the conversation, the summit between Xi and Putin, is kind of an avoidance of escalation, maybe some signals or efforts to compromise. But really, I think the big picture here is that the U.S. and China are in a stalemate. And I think, that sort of implicitly acknowledging that stalemate and avoiding a further escalation is the kind of most likely outcome, maybe some sign of significant compromise. But, that stalemate, the tensions, and the issues between the U.S. and China seem to me very likely to continue. And I think in that context, markets are climbing a wall of worry in a way, right? Although there's been some volatility, the generally interesting thing, I think, is that gold has been going up at the same time that risk assets have been going up, and financial safe haven assets have not really been going down. And if anything, in the case of the U.S., which is facing a bit of a slowdown, treasuries have done fairly well. I think that is all likely to continue as long as there's not a big bust up. And I think they're going to do everything they can to avoid a bust up. And like I say, I think we're looking at a stalemate and, indications of compromise, but no resolution.
Right. And Mr. Das, we've also, when it comes to such meetings, as I was asking the previous guest as well, a lot of it is about the messaging. Even if a clear trade deal is not signed, and like you said, global markets are also watching for some de-escalation. So, what are some signs that you will be watching out for that will make you, maybe breathe a sigh of relief or even make you more cautious when it comes to the US-China trade deal?
Well, look, I think the positions have been pushed far apart enough that there's room for some signals of compromise without really sacrificing the red lines. And I think the red lines here are that, the U.S. wants to de-risk or potentially, in the extreme, decouple from China. I think there's, very little chance of decoupling quickly or achieving decoupling in any kind of reasonable horizon. So therefore, I think what we should expect is a kind of, like I say, a signal of compromise, maybe some relaxation of technology and semiconductor and, other kinds of threatened export control software and so forth, and some kind of improvement on the rare earths front. But no real, like I say, no real resolution, no real improvement in the direction of travel in the relationship, which is tense, which is rivalrous, and in which the U.S. feels threatened by China's rise and by the potential for conflict. Right? I myself think conflict is fairly unlikely, but it is an important scenario that both planners in China and the U.S. and policymakers and politicians have to be concerned with. And I think as long as the market gets the signal that we're not heading to a further escalation of tariffs or a further escalation of export controls and some degree of rollback, you'll get a sigh of relief, kind of rally. And despite the fact that nothing has been solved, and despite the fact that the uncertainty will continue in that bilateral relationship and perhaps in the Trump administration's trade policy in general. And I would go so far as to say that uncertainty is a feature, not a bug, of Trump's approach to the art of the deal, right?
So tensions might still keep running high, but a relaxation would be the best bet to come out of this particular visit. But now, coming to you, Jayant, even though India isn't on Trump's itinerary on this visit, the US-China talks could still affect us. What should India be watching for most closely in this meeting?
If you look at the countries, he's going to Japan, Malaysia, South Korea, and of course there's not a proper bilateral, but there's a meeting in China as well with the Chinese president also. So if you look at the tariff that they have with South Korea, they have 15% tariff currently. Japan is 10%, China is 30%, but with the threat to take it to 155%, right? So I think. Under that backdrop, one has to look at while India's there's no meeting with anybody from India, but the entire global economy is so well integrated and connected that with the Chinese president, some of the key things which are likely to come up is now with the two sanctions against the two Russian companies. Would China stop buying the Russian crude oil? I think that's agenda with China as well, not just with India, right? Also, US wants China to commit to imports of US soybeans, right? There has been a de-dollarization threat from BRICS as well as China. That is what I'm told is likely to come up for discussions, although no agenda is formally available as of now. I think President Trump would also do some smart marketing for Boeing planes, to be bought by China, And I think the single most important agenda is going to be the rare earth availability from China to US and elsewhere in the world. As we know, China has imposed some restrictions on rare earth exports and so on and so forth. And China, controls almost 70% of the mining of rare earths and 90% by way of processing, right? So they have a virtual monopoly over the rare earth minerals and so on and so forth. I think these kind of things are likely to come up, and I would believe that in the process, China would expect US to let more higher-end computer chips flow, from US to China. I think these are the important things. I mean, still we don't know whether this President Trump and Chinese president meeting is a full-fledged, serious bilateral, or it is just a pull-aside meeting. So I think it depends on all these things, to my mind. And obviously, see, if you look at from a tariff and trade perspective, US's enemy number one has been China, right? Because with
Yes.
China, they have a trade deficit of almost
Yeah.
$300 billion, right?
Right.
So but the
Jen,
the kind of economic indispensability China has been
Jared,
able to create.
apologies for butting in, but on the rare earths matter, I would want to get a word in from Mr. Das. This has been an issue that has been under discussion for multiple months now. So, in this particular visit, do you think that Trump will have his way on the rare earths issue, or will it go Xi's way?
Well, I think like I said, I think there's room for some degree of compromise because the positions are quite far apart, but no real resolution. As was just being said, China has a monopoly position on many critical minerals and rare earths for magnets, for military use, for EVs, for semiconductors, you sort of name it. But it wasn't always that way. China does have a huge proportion of the world's rare earths that are known in terms of reserves, but other countries have significant reserves as well. And indeed, the U.S. used to have quite a significant rare earth industry, which became uncompetitive as China's rare earths industry was built up, and indeed the firms in China, of which there used to be many, were sort of consolidated and brought under state control. Now, this monopoly position and the expansive export controls that China has, sort of signaled, are a threat to the U.S. and they're a threat to many other countries, both to their economies and to their national security. So I think China has sort of shown its hand here. And I think this raises the stakes for the US and for many, many other countries. So I think what we're going to see out of this is some de-escalation. But I also think, the kind of long-term outlook here is that there's going to be some effort, maybe quite some significant effort over time, to de-risk one's economic relationship, many countries, not just the US, with China by finding alternative sources of supply and processing, right? And obviously can't be done overnight. It took decades for the US industry centered at Mountain Pass in Nevada to be sort of vitiated by the rise of China's rare earth industry. Similarly, I think this is going to be at least a multi-year process that governments are going to, probably accelerate, right? Because it's going to be quite dangerous to be exposed to a monopoly supplier.
Right. Right. Mr. Das, since you mentioned about what this could mean in the longer term, Jayant, here I want you to come in and help us understand in the longer term, how does, maybe not a successful trade deal that gets signed in this visit, but just the de-escalation between US and China, how does that augur for India's position amongst the Asian counterparts?
See, one thing, one thing be very clear that there are no great expectations from this visit whatsoever. No country has great expectations. Even though President Trump has this reputation of being a transactional president, a deal maker, and everywhere he goes, he wants to strike a deal. But here, I don't think the kind of open issues that which are still there between China and US on trade issues, they are likely to be settled during this meeting at all. So I think it's a long haul. It's not going to be easy at all. But I mean, if you just extend the focus from China to some other countries, he's going to. I think that there's a serious agenda there also. With Japan, if you look at, there's a new prime minister now, Sane Takaichi. And two major issues which President Trump is likely to take up with her are, he'll talk about Japan stepping up the overall military spend so that the US arms companies benefit and everybody else benefits. And he's also going to talk about, $500 billion worth of, the proposed Japanese investment in the US, I think. And let's not forget, in the same region, I think we also have Cambodia and Thailand, and there is some likelihood of a ceasefire agreement getting signed, and there's a self-acquired reputation of being a global peacemaker that Trump seems to be so fond of. He may like to pocket the entire credit for some kind of a ceasefire, even though there are many, many volatile issues which are still open. If at all it's a ceasefire, it will be a temporary one. So I think things are happening with Korea. There are issues of about the $350 billion worth of Korean investments in the US, and Korea is not very happy with the deportation of some of the Korean workers there.
Right.
They want peace talks to be negotiated with North Korea, although there'll be no meeting with President Kim at all.
Right.
But so I think these are all open issues, big agenda. But let's understand it's the largest overseas visit of President Trump since he took over in January this year.
Right. So with three countries, there's lots to watch out for, but looking at a successful trade deal with China might be slightly far-fetched right now is what our experts are also telling us. With that, gentlemen, thank you so much for joining us on ET Now and helping us decode this meeting.